If you are on Social Security or Medicare right now, I need you to stop whatever you are doing and stay with me until the very end of this video, because what I am about to walk you through could genuinely change your financial situation starting this month. Not next year, not after you talk to some financial advisor who charges you $200 just to sit down. Right now, today, with steps you can take before this week is over. I know that sounds like a big claim, and I know you have probably seen videos before that promise big savings and then hand you some recycled list of couponing tips or tell you to switch your phone plan. That is not what this is. What I found when I went through federal law, current Medicare guidelines, and everything that was updated going into 2026 are 5 specific recurring bills that millions of American seniors are paying every single month when they are legally not required to pay them at all. These are not loopholes. These are not tricks. These are federal and state programs funded with taxpayer money, your money, that exist specifically to cover these costs for people who qualify. And the overwhelming majority of people who qualify never see a single dollar of that benefit simply because nobody ever told them it existed. Think about that for a second. The money is already allocated. The programs are already funded and running. The applications are sitting there waiting to be filled out. And every single month that goes by without you filing is another month where you are paying out of your own fixed income for something the government was supposed to take care of. That is not a small thing. When you add up all 5 of these bills together, we are talking about savings that can reach into the thousands of dollars every year for a single household. For some people watching this right now, especially homeowners, it could be even more than that. I went through everything carefully so you do not have to. And I am going to walk you through each one of these bills, tell you exactly who qualifies, what the actual dollar amounts look like in 2026, and precisely what you need to do to stop paying them. Stay until number 5, because that one is the one almost nobody talks about, and for anyone who owns their home, it is potentially the largest saving of all 5. Before we get into it, if you are not subscribed to this channel yet, please hit that subscribe button right now and turn on the notification bell. The reason that matters is not just so I get a view. It is because the rules around Medicare, Social Security, and these benefit programs change every single year. Income thresholds shift. New programs open. Old ones get updated or expanded. Enrollment windows open and close. And if you miss a deadline because nobody told you the rules changed, that money is gone. I cover all of this in plain language, no jargon, no confusion, just what you are actually entitled to and exactly how to claim it. The people who are subscribed stay ahead of this. The people who are not tend to find out after it is already too late. So subscribe, turn on notifications, and let's get into it. Every single month, $185 gets pulled directly out of your Social Security check. It is automatic. You never see the money. It just disappears before your deposit even hits your account. Most people on Medicare have been watching this happen for years and have never once questioned whether it has to be that way. They assume it is just part of the deal, part of being on Medicare. What they do not know, what nobody told them, is that there is an entire category of federal programs designed specifically to pay that premium on your behalf so that you keep the full amount of your Social Security every month. These programs are called Medicare Savings Programs, and they are run through your state's Medicaid office using federal funding. There are 3 different tiers, and each one covers a different level of your Medicare costs depending on where your income falls. The most comprehensive one is called the Qualified Medicare Beneficiary Program, or QMB. And when I say comprehensive, I mean it does not just cover your Part B premium. It covers your Part A premium if you have one, your deductibles, your co-payments, and your co-insurance. Everything that Medicare would normally ask you to pay out of your own pocket, QMB wipes out. Completely gone. Paid by the state on your behalf. If you are a single person with a monthly income under approximately $1,350, or a married couple bringing in under about $1,824 a month combined, there is a very strong chance you qualify for QMB right now. If your income is slightly above that, up to around $1,816 a month as a single individual, there are 2 additional programs called SLMB and QI that will at minimum eliminate that monthly Part B premium charge entirely, even if they do not cover the other costs the way QMB does. Now here's the part that frustrates me every time I talk about it. The reason millions of people who qualify for these programs do not have them is simply that you have to apply. It is not automatic. Medicare does not enroll you. Social Security does not flag your account. Your doctor does not mention it. Nobody reaches out. You have to go find it and you have to fill out the paperwork. That is the only barrier between you and never seeing that $185 charge again. To get started, call 1-800-MEDICARE, which is 1-800-633-4227, or go to medicare.gov and use the tool to find your state's Medicaid office. Make that call or visit that site before the end of this week. Every month you wait is another month that money leaves your check unnecessarily. A lot of people hear I have Part D and think they are fully covered. And I understand why, because that is how Medicare is presented to most people. You get Part A, you get Part B, you add on Part D, and the assumption is that your bases are covered. But there is a significant difference between being covered and being protected from high costs. Part D covers your prescriptions, but depending on your plan, you could still be paying $50, $80, even $120 or more per medication every single month. For someone on 3 or 4 prescriptions, which is extremely common for seniors, that adds up to several $100s a month coming straight out of a fixed income. What most people have never heard of is a federal program called Extra Help, also known as the Low Income Subsidy. And this program does not just trim a little off your prescription costs, it fundamentally transforms what you pay. With Extra Help, there is no Part D premium, there is no annual deductible, and the absolute maximum you would ever pay for any covered medication is $4.50 for a generic drug, or $11.20 for a brand name drug per prescription in 2026. That is the ceiling. That is the worst case scenario under this program. Compare that to what people without this benefit are paying for the same medications, and you start to understand just how much money is being left on the table every single month by people who simply never knew to apply. The income threshold for Extra Help in 2026 is approximately $23,340 per year for a single person, which works out to roughly $1,945 a month. For a married couple, that threshold is higher. And here is something that is genuinely helpful if you are watching this and you already applied for one of the Medicare savings programs I just described. If you got approved for QMB, SLMB, or QI, you are automatically enrolled in Extra Help. No separate application, no additional paperwork. It triggers on its own. That is one of the rare cases where the system actually works in your favor. If you have not done either yet, you can apply for Extra Help directly through Social Security. Go to ssa.gov or call 1-800-772-1213. The application is not complicated. It asks about your income and your assets, and that is essentially it. Do not let the idea of paperwork stop you from saving potentially hundreds of dollars every single month on medications you are going to be taking regardless. This one hits differently than the others because energy costs are not a once-a-month line item you can budget around. They are variable, they go up in the winter, they spike in the summer, and in 2026 they have gone up significantly for everyone, but especially for people on fixed incomes who do not have any ability to absorb the increase. Home heating costs are up nearly 9% compared to last year. Electricity in many parts of the country is up over 12%. For a retired person living on Social Security, those numbers are not statistics. They are the difference between keeping the heat on and making a very uncomfortable choice. What most people do not know is that there is a federal program called LIHEAP, which stands for the Low Income Home Energy Assistance Program, and it does not give you a coupon. It does not give you a small percentage off your bill. It makes an actual cash payment directly to your utility provider on your behalf. Your gas company, your electric company, whoever is sending you that bill receives payment directly from this program so that the charge never reaches you in the first place. Depending on your state and your household situation, that benefit can be several $100s per year, sometimes significantly more. The income eligibility varies by state, but in general, if you are a single person bringing in around $22,000 a year or less, there is a real chance you qualify. And here is something that matters specifically if you are 60 or older. Seniors get priority access in most states, meaning you can apply a full month before the general public. And that is not a small thing because LIHEAP operates on a first-come, first-served basis. When the annual funding for your area runs out, it is gone until the next cycle. There is no wait list, no catching up. If you apply late and the money is exhausted, you wait another full year. That is why knowing about the senior priority window is genuinely valuable information, not just a nice detail. There is also a connected program that almost nobody talks about called the Weatherization Assistance Program. This one does not just help with your bill, it sends a certified technician directly to your home to inspect your insulation, seal up drafts, check your windows and doors, and repair or replace heating and cooling equipment that is costing you money every single day because it is inefficient. Everything is done at absolutely no cost to you. And the result is a permanent reduction in your energy bills that continues paying off year after year long after the visit. This is one of the most underutilized programs I have ever come across. To find your local LIHEAP office and get connected to both programs, just dial 211. That is the National Social Services helpline, and they will connect you directly with the right office in your area. This one catches people completely off guard because it involves a Medicare surcharge that most people have never even heard of, and it is being silently deducted from their Social Security every single month. It is called IRMAA, which stands for Income Related Monthly Adjustment Amount. And the way it works is this. If your income, as reported on your tax return from 2 years ago, was above a certain threshold, Medicare does not charge you the standard Part B rate. They charge you a significantly higher rate. We are talking anywhere from $259 to $628 per month for Part B alone, deducted automatically, on top of everything else already coming out of your check. A lot of people see a smaller Social Security deposit than they expected, shrug, and assume that is just how it works. And I understand that because the deductions happen automatically, and Medicare does not send you a clear explanation of why your amount changed. But if you are seeing unusually high deductions and you had any kind of elevated income 2 years ago, IRMAA may be the reason why. Here is why this is especially unfair for retirees specifically. Medicare looks backward. They use your tax return from 2 years prior to determine your current surcharge level. So if you retired last year, or if you sold a property, completed a Roth IRA conversion, or had any kind of one-time income event that temporarily inflated your earnings on paper, you could right now be paying a surcharge based on income you no longer earn and no longer have access to. The money is gone. The event is over, but the penalty is still showing up in your monthly deductions as if nothing changed. The fix almost nobody takes advantage of is an appeal, and it is not a difficult process. There is a specific Social Security form called SSA 44 that exists precisely for this situation. It is designed for people who have experienced what they call a life-changing event, which includes retirement, significant reduction in work hours, loss of a spouse, loss of income-producing property, or employer settlement payments. You fill out the form, attach documentation showing what your current income actually looks like now, submit it to Social Security, and if approved, that surcharge gets reduced or eliminated going forward. People who do this are getting $200, $300, even $400 a month back. That is money that should have stayed in their pocket all along. You can download the SSA 44 form directly from ssa.gov or pick up a physical copy at any Social Security office near you. I want you to think about something. If you are 65 or older and you own your home, think back over the past several years. Has your county government ever sent you a letter, made a phone call, or communicated in any way to let you know that as a senior homeowner, you may be entitled to significant reductions on your property tax bill? For the overwhelming majority of people watching this right now, the honest answer is no. That letter never came. And yet nearly every single state in this country has programs in place. Senior property tax exemptions, senior freeze programs, circuit breaker credits, homestead exemptions with age-based enhancements that can reduce the taxable value of your home, cap your tax bill so it cannot continue rising year after year, regardless of what the housing market does, or in some cases, eliminate a meaningful portion of your property tax liability entirely. We are not talking about small savings here. Depending on the state you live in, the county, the value of your home, and the specific program you qualify for, the annual savings can range from a few $100s all the way to several $1,000s per year. Every single year, for as long as you own that home and continue to qualify. That is real money, the kind that genuinely changes what a fixed income feels like month to month. Some states go even further. Illinois has a program that freezes your assessed home value at the level it was when you first qualified, meaning even if your home's value doubles, your tax bill stays the same. Texas offers a homestead exemption specifically for seniors that removes a significant portion of your home's value from taxation entirely, and also caps annual increases on your school district taxes. Florida, New Jersey, Pennsylvania, Arizona, and dozens of other states all have their own versions of these protections. The programs exist everywhere. The problem, and it is always the same problem, is that they are not automatic. The county assessor does not flag your account when you turn 65. The tax office does not reach out and say, here is your exemption. You have to know to ask, and you have to go apply for it yourself. The way to find what is available in your specific area is straightforward. Search your county name followed by Senior Property Tax Exemption 2026. Or even simpler, pick up the phone and call your county assessor's office directly. Tell them you are 65 or older, that you own your home, and ask what programs are available for senior homeowners in your county. One phone call. That is genuinely all it takes to start the process, and the savings that result from that one call can follow you for the rest of the time you own that home. So let us bring all 5 of these together, because I want this to be something you can act on immediately, and not just a video you found interesting and then forgot about by tomorrow. Bill number 1 is the Medicare Part B premium, $185 every month, automatically deducted from your Social Security, which Medicare savings programs like QMB, SLMB, and QI can eliminate completely for people who qualify based on income. Bill number 2 is your prescription drug costs, which the Extra Help program, also called the low-income subsidy, can reduce to almost nothing by capping your per-prescription costs at just a few dollars and eliminating your Part D premium and deductible entirely. Bill number 3 is your heating and cooling costs, which LIHEAP addresses by making direct payments to your utility provider on your behalf, with seniors receiving priority access before funding runs out each year. Bill number 4 is the IRMAA surcharge, an often invisible Medicare penalty based on income from 2 years ago that you can appeal and potentially eliminate entirely using Social Security Form SSA 44, especially if your income has dropped since retirement. And Bill number 5 is your property taxes, where senior exemptions, freeze programs, and circuit breaker credits exist in virtually every state, but only take effect when you go through your county assessor's office and actually apply for them. 5 bills, 5 programs, 5 steps that require nothing more complicated than a phone call or a form submission. The only reason most people never claim these benefits is that nobody ever sat down and explained them clearly. That ends today for everyone watching this video. If this helped you, please subscribe to the channel right now if you have not already. And more importantly, share this video with someone you care about who is on Medicare or Social Security, a parent, a neighbor, a friend, a family member. One conversation, one shared video can change someone's financial reality for years to come. I will see you in the next one.